Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at IONQ.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. We are looking at a company that's really at the absolute bleeding edge of technology. Quantum computing.
Right. And this is a field that is, highly speculative.
Oh, extremely. But the fundamentals that are starting to emerge from this particular company have created a really powerful bull case. And it's built on two main things, just explosive revenue growth and massive capital resilience.
When we look at the financials, the word explosive it almost doesn't feel like enough.
No, it's not.
This isn't just growth. It's acceleration at a speed that frankly, most tech companies can only dream of. Just look at Q3 2025. They pulled in revenue of, $39.9 million?
$39.9, yep. And that is a 222% increase year over year.
I mean, that's just staggering.
It is. And it's important to see what that really means. It's not just, adding a few small customers. This points to a structural shift where major institutions, we're talking government labs, large cloud providers, are starting to commit serious money here.
So it's moving from just R&D funding to real commercial contracts.
Exactly. Still early stage, for sure, but that transition is happening.
And the company itself seems incredibly confident that this trend is going to continue. They've consistently raised their revenue projections for all of 2025.
They have. They started the year, pretty cautiously, and now they're projecting full-year revenue somewhere between $106 million and $110 million.
Which suggests their full-year growth is going to be over 140% compared to last year.
That's right. And for a company with tech that's still years away from mass adoption, showing that kind of commercial traction is extremely compelling for investors.
I do have to pause on their long-term ambition, though, it seems.
Yeah.
Audacious. The CEO has been very public, targeting revenue approaching $1 billion by 2030.
$1 billion.
That's basically a 10x target in the next 5 years. I mean, what has to happen for that to be even remotely feasible?
Well, that target implies that they have to transition from just providing early access to their machines to providing true quantum advantage solutions.
Meaning their machines are actually solving problems faster than a classical supercomputer.
Exactly. It's a bet on a huge structural transformation, and the CEO is citing a very strong pipeline of potential deals that suggests, they believe that tipping point is closer than a lot of the skeptics think.
Okay, so they're betting big on the future, but what if that takes longer? What if that pipeline stalls? I guess this is where that second pillar you mentioned comes in, the balance sheet.
This is the safety net. They have an absolute fortress, a huge cushion against any kind of volatility.
A huge war chest.
A massive one. They're holding approximately $1.48 billion in total liquid assets. So that's cash, equivalents, short-term investments. All as of this November.
And their liabilities are tiny in comparison, right?
Minimal. Just $62.2 million. So that $1.48 billion gives them immense flexibility.
That's enough cash for a decade of runway. Maybe more, even at their current burn rate. It means they can weather a downturn, a delay in the tech, pretty much anything, really.
And they don't have to rush back to the markets for diluted fundraising. It also lets them be super aggressive in R&D and strategic M&A.
Which we saw earlier this year.
We did. And crucially, those year-to-date financing inflows were $1.36 billion. They secured their future while the market was hot. This balance sheet strength it mitigates the single biggest risk for a company like this, running out of money.
Okay, let's take a breath, because that financial picture, while it's strong on the balance sheet, it comes with a major caveat on the income statement side.
It certainly does.
With all that aggressive spending, profit margins are under severe pressure. Net losses are still there. And while that's expected for a company like this, investors really need to understand the scale of those losses.
Right. And this brings us to the most complex and honestly the most important nuance of that Q3 report. If you just read the headline, it looks like a complete disaster. The company reported a net loss of over $1 billion.
$1.06 billion, to be exact.
Yeah.
$1 billion in losses in one quarter sounds like a death sentence for any company. We have to break down what created that number.
You're absolutely right to focus on it, but here's the critical context. The loss from operations, so the actual cost of running the business, the R&D, the expansion, that was $168.8 million.
Okay, still a lot of money, but not $1 billion.
Not even close. The The remaining massive portion, about $881.8 million, was entirely a non-cash loss.
A non-cash loss. Related to what?
It's related to the change in the fair value of their warrant liabilities.
Ah, the warrants from the SPAC deal.
Exactly. They have to be marked to market every single quarter.
So how does the stock price come into play here?
Well, what's fascinating and, deeply counterintuitive if you're a newer investor is that a non-cash loss like this often happens because the stock is doing well.
Wait, say that again?
The company's stock price went up a lot over the quarter. So when the stock price rises, the potential value of all those outstanding warrants increases dramatically, and the company has to record that potential cost as a liability and a loss.
So the success of the stock created an $881 million accounting loss. That's wild.
It is. It's an accounting mechanism. It is not cash walking out the door. It doesn't affect their operating cash flow at all. And that massive headline loss number completely masks the fact that the underlying business is scaling up really fast.
That context is just vital. Okay, so let's pivot from the finances to the technology. What's the moat? They're burning hundreds of millions on R&D, but they're competing against IBM and Google.
Right. Companies with unlimited resources.
So what are they building that those guys can't just replicate?
Their entire competitive advantage is centered on their choice of technology. Trapped ion quantum computing. That is their main differentiator.
And for the average person, what's the difference?
You can kind of think of it as precision versus speed. The superconducting qubits that, say, IBM uses are incredibly fast, but they're also highly sensitive to noise, to temperature. Their coherence time, how long they can hold on to information, is very short.
Okay.
IONQ's trapped ion qubits, on the other hand, use individual atoms that are suspended in a field. This system is just inherently more precise, more reliable, and has much, much longer coherence times.
So their machines are just less prone to error, which is absolutely critical in quantum computing, isn't it?
It's everything, yeah.
Yeah.
Every single error just cascades. So this is their fundamental technological moat.
And they're protecting it.
Oh, absolutely.
Right.
Their IP portfolio is extensive, over 900 applications right now. They're building a fence around this whole trapped ion field. And they're not sitting still. They're executing a really smart expansion strategy.
Let's talk about that, specifically the acquisition of Oxford Ionics for $172 million. What did that bring them?
That deal was incredibly strategic. First, it expanded their technical capabilities immediately. Second, it positioned them right in the middle of quantum networking and secure communications.
A whole new market.
A huge adjacent market, yes. And third, and maybe most importantly, it established a key European base for them, getting ahead of any potential regulatory or geopolitical issues down the road.
It sounds like a company that's thinking 3 steps ahead. And we're also seeing early signs of market trust, especially from the government.
That's right. Getting these big government contracts like the work you're doing with the Air Force Research Lab, that's more than just revenue. It's the gold standard of validation. It says the tech is secure, it's reliable, it's ready for national security applications.
Which is often the prelude to wider commercial adoption.
It often is, yes.
So speaking of adoption, let's turn to market momentum. The fundamentals look compelling, but how has the stock actually performed this year?
Well, the chart just shows a persistent and powerful bullish trend. The stock hit a low of, $17.88 back in March of this year?
Yeah, that's right.
And since then, it's rallied dramatically. It's established a very clear pattern of higher highs and higher lows. For technical traders, that is the definition of a strong, positive trend.
And the short-term indicators back that up. The stock is trading comfortably above all the key moving averages. The 20-day, 50, 100, 200-day, all the signals are green.
They are, and traders are watching some key levels very closely. There's key technical support identified near the 50-day moving average, which is hovering around that $47 mark. That's a huge psychological and technical floor.
And on the upside, where's the resistance?
The near-term bullish target and the major resistance zone is clustered between about $73 and $75 A clean break above that level would likely signal the next leg up for the rally.
And what's the sentiment like from analysts?
Overwhelmingly strong buy or moderate buy. Price targets are pretty consistently up to that $75 mark, with a few outliers even suggesting $100.
One of the most telling indicators, I think, is insider activity. What did management do after releasing results, especially with that confusing billion-dollar accounting loss?
Well, what's so fascinating is that after that Q3 report, insider activity showed net accumulation.
So they were buying.
Management and executives were putting their own money into the stock. That signals profound internal confidence. They know that non-cash loss is just temporary noise.
Okay, so let's look forward. What are the near-term catalysts, say, over the next 3 months that could push the stock toward that $75 resistance?
The biggest one, without a doubt, is the Q4 earnings release.
Hmm.
That's expected around January 2026. That's the moment where everyone will be watching to see if that triple-digit revenue growth is sustained or maybe even accelerated.
And if they raise guidance for 2026?
Expect a very sharp, positive reaction. But beyond the pure financials, we need to be watching for strategic announcements. Deeper cloud integrations, new federal contracts, updates on those quantum networking prototypes. Any of those could be major catalysts.
And of course, with high potential comes high risk. What's the number one risk here?
Execution. It's always execution in a field this new.
And execution means more than just hitting revenue targets here, doesn't it?
Much more. The timeline for achieving true, full-scale quantum advantage, where customers need this technology, is still highly uncertain. The current valuation is based on them hitting massive future milestones. If those slip, even by a few quarters, the stock will get pressured.
And the competition isn't going away.
No. Big tech rivals have vastly greater resources. And this stock also carries a lot of market risk. It has a high beta, sitting around 2.59.
So for our listener, what does a beta of 2.59 actually feel like?
It feels like a financial bungee cord. It's way more volatile than the general market. If the S&P 500 drops 1%, this stock theoretically drops by 2.59%. So despite that amazing balance sheet, the stock itself is very vulnerable to broad market corrections.
And finally, we should probably touch on the speculative buzz. There's a lot of social media chatter around this name.
A lot. Constant, unverified rumors about massive new cloud partnerships, imminent government security contracts.
And we have to remind you, these are just rumors.
Exactly. They are part of the trading narrative, and if they materialize, the upside is substantial. But until then, you have to view them with extreme caution.
So summing all this up, what's the final thesis for someone looking at this stock today?
Look, the analysis strongly supports an overall bullish rating. The core pillars are just so strong. Market leadership in a superior architecture, that exceptional revenue acceleration, and crucially, the powerful balance sheet that buys them safety and time.
So it really caters to two very different types of investors.
Absolutely. It's a compelling short-term trade for anyone focused on that Q4 earnings catalyst or potential partnership news. But it is also, I think, a fundamental holding for long-term investors who are betting on the entire quantum sector and who believe this company has the capital and the tech to become a mega cap player over the next 5 to 10 years.
The ultimate question for any investor, then, is deciding how much you're willing to wager on the exact timing of quantum commercialization, knowing that the execution timeline is both the greatest risk and the greatest reward.